Hey, what's up everybody? Welcome to the Average Joe Dividends YouTube channel. In this video, I'm going to let M1 do the stock picking for me. This is of course based on the allocations I have for the stocks in my portfolio. What we're looking at right now, this is my M1 taxable stock brokerage account. This is about 15% of my total net worth, and this is what I focus my videos on. And of course we track the dividend income from this portfolio as well as its growth as well. We'll just take a look at the last month performance. Pretty flat at 0.24%, and we've been living in a higher interest rate environment, and really nothing has changed, no big news, so we've been pretty flat as a result. Over the last week, up slightly at 0.76%. We'll look at today. Looks like we're just up slightly at 0.16. This morning when I heard the news, the people were saying that we're going to have a lower open, but it looks like overall, at least what's in my portfolio, is up some, probably helped by Broadcom as well as Nvidia. We'll take a look at those slices and see what's going up and what's going down. It looks like in the dividend portfolio is where the biggest move has been. We'll just take a look and see what it was. Like AbbVie, Prudential, Microsoft, and Apple. Looks like those have been our movers. So it looks like we have a mixed bag of some things going up, some things going down, but Broadcom looks like it's driving the gains within this portfolio. We'll go back to the main page here. We'll see what Nvidia is doing today. They're in my 12 more dividends portfolio. And looks like actually Nvidia is down a little bit. So at 0.83% down today, but that's not what they've been doing lately. Lately, this stock has just been going crazy. I keep having to change my target and bump it up. Looks like I'm going to have to bump this one up again to 28%. Otherwise, I'll never invest any money into Nvidia again because it just keeps climbing, and the actual exceeds the target. So what I'll do is I'm going to go into the activity log right now. We're going to see what buys I did. And again, M1 did the picking based upon my allocation within the pies. So just want to point out though, I got some dividends over the weekend. You can see Hershey's $8.18, O-Realty, a monthly payer, $12.73, and then Avista, $26.02. That's where we're going to see additional funds going into my buys, because this morning I did a $100 deposit, but the $46.93, those are the dividends being reinvested back into Hershey's, O, and Avista. So let's go see what those four buys were. It looks like there's just one buy for the $100, and we'll see what that is. So we can see here's the Avista, $26.02, the Hershey's, $8.18, and then O-Realty, $12.73, and then SCHD, which has not been doing great lately. The $100 is going into SCHD. It looks like everything that's not Broadcom or Nvidia really has been kind of flat or going down, and a lot of the stocks within SCHD, like value type stocks that pay a good dividend, they have been struggling lately, been flat or actually been going down a little bit. So that's why SCHD was chosen there. And I'll show you really quick where my SCHD lies. And I think tomorrow, at least according to history, SCHD will be announcing a new dividend for Q2. And their last one for Q1 was 61 cents. I'm predicting like 68 cents, right around there. We'll see what it actually is, but I think tomorrow is when that big news is going to happen. We can see why the money went into SCHD, which resides in the ETF slice of my portfolio. You can see between the actual and target, we're 0.6% underweighted, and we're 0.5% overweighted. Over here, looks like the dividend portfolio is just right at 27%, where it's supposed to be. But pretty soon I may have to change this to an 8% allocation. Otherwise, money will not really go into this unless the other ones catch up. And we'll see what we do with also when SCHD pays its dividend. I'm going to let probably M1 allocate that just so we can get the actuals and targets caught up on this portfolio. I'm going to move on over to my Google Docs spreadsheet, and we're going to take a look at this. This tracks the 53 positions within the portfolio. You can see the company ticker symbol, the share price, as well as the average share price, and that's my cost, number of shares, market value. Here's my cost basis, and here's my gain or loss in each position. You can see Starbucks is lower than what my average share price is. You can see I'm down 4.52%. And I think Starbucks might be a good buy, or at least it's worth looking into to start a position or add to it, at least in my opinion. Of course, what I'm saying is not investment advice. This is just what I'm doing. But you can see here the gain or loss here. This is the quarterly dividend per share, except for my 2 monthly payers in blue, which are O. That one just paid me. And also BST. I've got SCHD here. It's going to be paying me, looks like in the 24th is when it's going to be paying me. And it's a variable dividend. And it's at 61 cents, like I said before. And I put down here, I'm predicting 68 cents. And this is when I predict they will be making their announcement sometime tomorrow. Probably tomorrow afternoon. I don't think they do it right first thing in the morning. I think it's a later on, a close of business day type of announcement, but we'll see. We can see here the yield. This is the current yield current yield percentage of each position. You can see the yield on my cost. Some of these positions, you can see the current yield 3.48%. Here's my yield on cost because I bought these shares at a much lower rate. And over time, we're going to see within this portfolio too how the current yield and my yield on cost is going to have that kind of a disconnect just over time with me buying new shares, the stock appreciation, as well as the dividend going up year over year. We can see the pay dates, and that's very important to me because I want to see when I'm getting paid. I want to see how much I got paid. We can see here's the actual dividends that were paid to me so far in the month of June. We'll do a quick count up. And we're at 191.10 with a lot more to go. We got those two heavy hitters, SCHD and BST, yet to come. But you can see here, though, you can see the dividend paid, and then the next dividend, those numbers are different. And the reason is I reinvest the dividends back into the stocks. You can see what it does. You can see my next dividends for each of these positions are all going to be more. And the only exception is with the last, with a Vista right here. The other ones looks like I bought fractionals of those before. So their next dividend is going to be higher slightly. But we're going to make a Vista higher, as well as these two are going to go up with those dividends dripped. And we're also going to see SCHD, that 708.85 is going to go up. I'm going to type that in. It's going to go up just a little bit, by just over a share, because it's $100, so it's going to be about a share and a quarter. So it's going to be 1.25 times 61 cents. It's going to add that additional. But as we all know, with Q2, SCHD is going to have probably a higher dividend, so it's actually going to be higher than this. It's going to be higher than that 708.85. But I just want to demonstrate how the dividends are going to go up for these three with the dividend drips, as well as the SCHD. And I also want to show the cash flow, how that's going to change too, because I'm going to get paid more every month, every quarter, and annual as far as what this portfolio makes as well. So in order to do that, I have to import some data from M1. I'm going to bounce back to M1, go to the Holdings tab. I'll leave a link below so you can see everything that's in my portfolio. Like I said, there's 53 positions. You can see the cost basis and the current value of this portfolio. I'm going to grab everything from name, and everything is arranged by the largest position to the smallest. You can see SCHD is the largest position, followed by BST, NVIDIA, etc. I'm going to scroll down. I'm going to grab all this data to the smallest position, which is General Mills. I'm going to copy this data. What we're going to do is we're going to paste this into my Google Docs spreadsheet. And what it does is it pulls the information here, like the average share price of the VLOOKUP table in the M1 data tab, the number of shares, and my cost basis. And what that's going to do is, for the four positions, the three drips and the one buying SCHD, it's also going to change their next dividend, as well as the dividend income here. the 904.59 is going to go up just slightly. Let's go over to M1 data tab. Just do a paste special of the data I grabbed from M1 values only, and it's only going to update those 4 stocks where I changed those values. And now we can see 905.05 is the new value. This is how much dividend income was added. So 905.05, we're going to carry that over to our monthly average dividend tracking tab. Scroll down, and I just log every event that happens, like deposits, dividend drips, or even dividend raises as well. And these all add up. It's not going to be a huge number, the change, but over time, and plus I'm doing these every couple days, all the time, it just adds up. So I added 46 cents to my monthly dividend income, and that's because of the $100 deposit. Oh, Hershey, Avista dividend drips. So let's go bounce back to the dividend portfolio tab. We saw the change in the monthly, quarterly, and annual also went up as well. But I like to focus on the monthly because I look at that as a paycheck. So let's take a look at that, or the new dividends now. Realty is getting close to that $13 mark. We're up to $12.91. That's what it's going to pay in the middle of July because it's a monthly payer. And then Hershey's, we're up to $8.38. And then Vista, remember it was at $26.02. And now the next dividend that's going to pay in September will be $26.38. And let's see here. Let's also go over the next dividends I'm going to receive. Since tomorrow is the 18th, I'm going to get new dividends in my accounts, and we can see what those are going to be from Duke and McDonald's. I don't put those numbers in there yet because I have not received them. And what I do is when I receive the new dividend, you can see, like for a Vista, I just put that in, the last dividend, $26.02. So I have a dividend history. You can see for a Vista how that's gone up every quarter for me. And that's by buying new shares, reinvesting the dividends or a DRIP, and also the annual dividend raise by a Vista. The last one was pretty modest at 3%, but you can take a look at though Hershey had a 15% dividend raise. And some of these are a little bit inconsistent, but does several of them every year, like 3 or 4, it seems like every year, and it's like, but it's a small one. It's like 0.2% every quarter or so. And you can see others like Home Depot 8%, and some of them may have other zeros where they're inconsistent, where they don't raise their dividend every single year. And one of those would be Digital Realty. You can see that while I'm up on the stock, they pay a pretty decent dividend, but they haven't raised their dividend for several years. So hopefully Digital Realty will come through with a dividend raise, but I have them as VAR, as variable. The other ones that have a month assigned to them, those are kind of tried and true ones. Every year they will raise their dividend. So again, I'm going to wake up and have $25.81 from Duke and McDonald's, reinvest those, and again I'll be going back to the monthly average dividend tracking tab. I'll be making an entry for 618 with the McDonald's and Duke Energy dividend drips, and it's going to change this very modestly, maybe 10-15 cents or so, but these, you can see these all add up. And let's just go back in time how this has gone up. When I first started doing these, this was in December 2022. And you can see the event that I chose was SCHD raising their dividend in the fourth quarter of 2022. So this is my monthly income going up. Some things have brought it down. When I owned Jeppy, they were lowering their dividend. I sold them out of the portfolio. But the only thing that really has been dropping my dividend but it's temporary, is SCHD in Q1. But we're going to see that rebound here in Q2 with hopefully tomorrow the announcement, hopefully is 68 cents or even more. We'll see though, but 68 cents, I'll be happy with that. And what we're going to do next is we're going to go over my dividend tracker tab, and this tracks the portfolio over time. I started doing these videos in January 2021. You can see the portfolio value here starting at $18,700 and the first month's dividends paid here, and just going to go down to 2024. and you can see what the dividends look like now. And the largest paying months are going to be the last month of each quarter, which is your March, June, September, and December. And the reason for that is most companies pay their dividend in the last month of the quarter. So we are in the big month, which is the good news. And I'm hoping too, that we beat the December dividends and get above that 1550 mark. We'll see if we do that. So if you're not already subscribed, subscribe so you won't miss that video for the June recap to see if I beat my December dividends. And SCHD is the reason why December was the big month, because it paid an all-time high back, I think it was 74 cents back in Q4 of 2023. So we'll see. Even though we're not going to probably get to that 74 cents for SCHD, all the other investments within the portfolio having higher dividends, I think we're going to surpass the 1550 or get really, really close to it. We'll see. But we're only at the 191.10 mark because, again, we haven't gotten even close to getting all the dividends for the month of June. But we can see here, we're up to the 905.05. Remember, I copied that over to the monthly average dividend tracking tab, and we've raised the monthly income in this portfolio $3.06 just in the month of June alone, and that was a month-over-month gain of 0.34%. And then the annual dividends were getting close to the $11,000 mark. I was there until SCHD announced their lower dividend. You can see what that did temporarily to my monthly increase. There's a decrease. And what I may do going forward, maybe starting in December, like the last dividend from SCHD, what I may do is just take the average of 2024 and then carry that into 2025, so I don't have so much of this up and down with SCHD. And then every year I'll just adjust that average as we go into a new year, and so it'll kind of eliminate that volatility. We'll have more of a smoother average monthly dividend. So let me know in the comments below what you think of that, just to kind of smooth it out, and having to re-explain over and over the lower Q1 SCHD dividend. So I don't know. I'm thinking of doing that. We'll see. Since I deposited $100, I'm going to put that right there before I forget it. But we can see the annual increase as well, the 36.76. So to close out this video, I'm going to go over my total net worth, which is at all-time highs. And like I said, my dividend portfolio, that is 15% of my net worth. We can take a look at my other investments, like an IRA. This is a traditional IRA here, mostly my own money every year, just putting it in, and not necessarily to the maximum, but just a traditional IRA I hold at Vanguard. It was not my employer IRA. We'll get to that in a little bit. I also have a tiny Roth IRA here with Vanguard, but you can see my Vanguard investments are very boring ETFs, tried and true ETFs. And here's my taxable brokerage account, once again with VUVUG, VTSAX, VYM, VXUS, just very boring stock, and a little bit of bond exposure up here, very tiny. I'm not really big on bonds. I'd rather carry cash right now in this environment with up to 5%, APRs and savings accounts. I say, what's the point of even having bonds right now? If you disagree with me, put a comment below if you think I should own more bonds. But to me, it just doesn't make any sense right now. And then here's my current employer 401k, mostly invested in an S&P 500 fund with a low fee Fidelity fund there. You can see just a little bit of bonds in there and stable value in there. And then here's my IRA. This is from prior employment, and just transferred the IRA over here to M1. You can see again in boring ETFs. And then here's the taxable brokerage account where I went over all the dividends, and we can see here M1, I'm trying out their 5% interest savings account, so I have a few dollars over there. That's right now I'm using it kind of to move my money over to buy more shares, like my $100. So I may push more of this money. The Synchrony is at 4.25%. I may start pushing more to the M1, but I mean, it's 0.75%. Of course, it's more money. I should probably do that, maybe optimize We'll see. And then here's Capital One, where I keep more of my immediate money, and immediate emergency fund, I would call it. This is more of my long-term emergency fund over a year of expenses over here. So that helps me to sleep quite well at nights. And then here's my home value. And I do have a mortgage out, so we're going to subtract that out. And then the current balance on my credit cards, but this is not a balance I carry. I pay off my credit card balances in full every month. I didn't do that in my 20s, in probably late 20s up to there, because of like finishing up college and things like that. I had other things going on, but I've been out of credit card debt ever since. And same with, I don't have a car loan right now. I have a paid off car, no student loans. Very fortunate in that aspect as well. You can see the total here. Here's the total net worth up to new all-time highs. Then here's the breakdown. You can see very heavy in stocks. Like I said, very low in bonds at 1%. Rather be in cash right now, but it's to say personal finances are very personal, but that's what I think is right for me. You can see the breakdown of pre-tax and after-tax. I think it's important to have significant or a good portion in after tax. I think too many people, they concentrate on two things, and it can hurt them with their finances, and that's having everything locked into your pre-tax, like your 401k, your IRAs, and also into your home. Because if you have economic issues, what can you do with that? I suppose you could take a early withdrawal with your 401k and liquidate that, but you'll pay a 10% penalty as well as income taxes on that right away. So that's not ideal. So I urge people to maybe take a look at it, to have a little bit more in after tax in case something happens. You can see how much ammunition I have if something happens, or if I want to buy something, or maybe I decide, well, I just want to pay off the house. I want this to go away. I could very well do that. Right now I'm not doing just making my payments plus some. I've been adding $100 every month. We'll see how long that goes on for. I keep incrementing $100. I'll probably do it until it hurts, but you can see my mortgage percentage is 6.25%. I recently built a house and moved in February. It was completed. So, at the upper end, I know some people have like 2, 3, 4%. So we'll see. If we get back down to lower interest rates, I will likely refinance, but we're not close to that right now. The Fed's talking about doing interest rate cuts, but I think with the economy right now, I think they have no business doing so. I think it'd be a really bad idea. I would just, as nice as lower interest rates would be for borrowers, it's just, I think we have too much funny money out there in the economy that has to go away before they can start cutting interest rates. So we still have too much inflation, in my opinion, but I'm not an economist, so who am I? I'm just an average Joe. But thanks for sticking to the end of this video. Again, I'll show you, well, I timed out. It's really easy to tell you what I bought, in case you forgot. It was one thing. SCHD, I'm going to be doing a video on SCHD when they announce their new dividend, because I want to show the impact of what that is on my future dividends. And I also own SCHD. You can see here, well, in my taxable brokerage account here with the 1161 shares, but back to total net worth, I have it also over here on an IRA at M1, an additional 1,815 shares. So this will significantly impact my income and what I reinvest back into my IRA as well as my taxable brokerage account. So that's all I had to show you guys. Thanks again for watching this video. Thanks for sticking to the end. If you got value from this video, please click the like button. Also subscribe so you do not miss future videos. Everyone have a great week and take care.